Good morning, traders. Paul here with GammaEdge. Today is Monday, the 27th of February. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today. We are still in the short-term continuation day down. The cumulative tick is lower, and it has a railroad track down pattern. I'll explain that here on the next slide. Just be aware, 68% of the time, the signal terminates after 4 days. We're in day 5, or have completed day 5, looking into day 6 here. So just be aware of that. The long-term ribbon has inverted to the bearish side, so this is more or less an indication that we should be playing the downside, meaning short those bounces. Don't necessarily get over your skis to the long side until we have a change in sentiment. The market breadth, as viewed by our 52-week new high, new low breadth indicator, is showing 4 consecutive days of the new lows outpacing the new highs. Note there's only 5 of these in 2023. So we are now in a different sentiment perspective, a regime change per se. And until we start seeing the breadth reverse, this is supportive of the ribbon being down. The longer term view is more to the downside. The right goalpost, which we define as positive gamma exposure, remains at 4,200, and the left goalpost is, which is negative GEX, is at 3,900. And these are really probably the 2 ranges we're going to play within, most likely for the week. In fact, it's probably a little tighter than that, and we'll talk a little bit about that here shortly. Want everyone to realize that what we define as the transition zone continues to move down. This is not a good thing for the bears, or excuse me, the bulls. The bears are definitely in control, and they're adding those speculative out-of-the-money puts below us, and that is pulling the overall complexes, whether it's the SPX PM-Settled, the AM-Settled, or the SPY-Qs, IWM, etc. It's pulling them down. The bulls overall are weak. It's difficult for the bulls to really define some upside targets with the out-of-the-money calls effectively not even being visible, and the in-the-money puts just dominating the landscape. A lot of the folks in GammaEdge are 0 DTE folks. The 0 DTE crowd wants you to be aware of that the charm flows in the PM-Settled complex, which we separate out of the total SPX, because this is tradable. This is actually the one that gets a lot of daily volume, of course. It indicates a stronger upside push early today, Monday. I see that futures are up, and I see that a lot of the liquidity stocks are up. And we think in general charm flows are supportive to a push higher, but these are driven largely right now by out-of-the-money puts, and as you know, these out-of-the-money puts are going to expire at the end of the day. And when that happens, those charm flows start to vaporize as we get into the afternoon session, and the in-the-money puts, which is the other half of this and have negative trending deltas, are going to take over, we think, and we think there's a possibility of some weakness into the afternoon session. Key levels that we're watching today: 3,900, 3,930, not on the quarter level, 3,950 on the half, and then 4,000, the Livermore level. Everyone seems to be stacked onto that. We are looking at, where could sentiment change. We do see some things in the landscape which point to perhaps the latter part of this week being a little more constructive for the bulls. We are looking at 39.95 as a bare minimum for a close above that. If we can get above that 39.95, we do see the potential for the bulls to start taking over, but we have to close above that, not just push above it. We think the 40.30 is a real key line here for sentiment change. Again, we need to close above these levels, not just intraday drift above them. And then we think if we can get both of these to happen, that the delta gamma structure will then shift into a positive charm flow. We'll start capturing more and more of the out-of-the-money calls, and which will drive the charm flows positive, and we'll have less of the in-the-money puts, which will then force them into an out-of-money status, and will also have a minor impact on positive charm flows. We're not there yet. and we don't see it tomorrow, which is the end of month February expiry. I didn't mark this cumulative tick chart up. I spent all last week breaking this into its constituent components. I would urge everyone to go back, watch those videos if you didn't see them. A lot of information here. The ribbon, as I was just saying, we had a longer term inversion last week. That confirms a downward move. And it's not actionable in the sense that you would take a new signal on this inversion. It's lagging, of course, but it does confirm an overall major change in sentiment in the markets. I just want everyone to be aware of that. And it's due predominantly because we are pulling down here with the white bolded line, which is the cumulative tick. It's not delayed. It basically has a direct indication of sentiment, and you can see we're on successive days down, and clearly lower, lower, lower. We've been in a pretty bearish stance all of last week. We are in this railroad track down pattern. We are in day 5, completion of day 5, and what that effectively means is that we're beyond where we need to see a bounce. We may see it today with the futures up and with liquidity stocks, which comprise the major indexes. We may get a reversal upward. If we get that, that'll be great. Play it on the short term to the upside, but just be aware the overall sentiment has not repaired itself. It takes literally days to weeks to repair a bullish to bearish or bearish to bullish type of sentiment change, and it doesn't happen in a day. So with that being said, we will play short-term bounces to the upside, and then we will play to the downside as things start rounding out, which we anticipate could happen. Taking a look at the overall key levels here in the SPX, first thing to note is that on both the PM-Settled Complex here on the left and then the combo complex here on the right, we are seeing deltas come out of both of these. And what that means is that the put speculators are there, or they're cashing in some of their gains, and the calls are basically vaporizing. They're thrown in the towel, and that's giving a downward push to deltas in the overall complex. And again, that is not constructive to the bulls. So just be aware of that for both the PM and the combo complex. That's what we're seeing. No real change to the goalpost. As I said, 4,200 for plus GEX to the upside, 39 to the downside. And COI and POI, which is call open interest and put open interest. Not a liquid thing, but we do track it because it does show just everyone's stacked on the 4,000 strike. Expected move, which is a conservative open high-low close, created mostly for our premium sellers. We're looking at these ranges as being relatively safe zones. The expected move is effectively unchanged from where it was last week. We've been drifting in this 2.1 to 2.3 range. So not expecting any major moves one way or the other. Taking a look at the PM-Settled Complex, a lot of information here. I would pause your player. I'm not going to talk about everything here. But just want everyone to realize the deltas overhead are completely dominated aside from these two strikes. They're completely dominated by in-the-money puts. The out-of-the-money calls just are not present. So there's no upside speculation that is anywhere near negating the in-the-money put structure that's up there. To the downside, the out-of-the-money puts are controlling all of the air in the room. There's only two strikes that are poking through, that where the in-the-money calls are winning. Everything else is out-of-the-money put structure. Transition has moved down. Key strikes that we're looking at in the SPX PM complex are shown. This is the JPM. So 40.30, 39.50, 3,900 are real key levels that we're watching. Taking a look at the charm flow and this link here that you should be able to go interact with. The real takeaway here is that we do have, for the morning, you can see the 0DT is right along this boundary right here, and it's showing that the 3,900, the 3,930, and the 3,950 do have out-of-the-money puts that are contributing significantly to the charm flow. We've put a label on here automatically that tells you that this is mostly coming from, the 0DT is coming from the out-of-the-money puts. And then down over here, you can see the in-the-money puts. And the in-the-money puts here are showing the 4,000 strike is the real key for today. We're right up against the 0 day, which is today. Just remember, when you're looking at charm and these are out of the money, these are going to start vaporizing in the latter part of the afternoon session, and this is going to grow dramatically. And so the contribution from any upside push in deltas is going to start vaporizing, and we're going to see those negative flows. Now, this can all be negated, as we said in our tweet over the weekend, this can all be negated by the 0DTE opening and closing of deltas. This is a background impact, but just be aware that it does exist, and it does suggest, while people are getting positioned, that we could see a morning bounce, and then perhaps as these fade into the afternoon session, some profit taking and some downward push in deltas. Taking a look at the 0DTE, it's really supportive of the charm picture. 3950, 4000, very tight transition. It's lower. You can see this double structure right here at 3995, 4000. So we think this is an interesting area that we could push into sometime today. To the downside, 3950, we've got a little bit of a gap, and then you can see a lot of put-dominated gamma here coming off the table today, all the way between 3900 and 3930. And again, the charm flows support that. We are mindful of this pocket. These are in-the-money calls that are vaporizing today. That's not good. You want to see a sea of red if you're a bull. And when you start seeing some green, those are in the money calls that are coming off because they're below the yellow line. In the money is down here. And when you see that, that's a weaker structure. Literally, as I put in my morning notes this morning, this is literally the sand eroding under your toes as you stand at the water's edge. So just be aware of that. To the north, we do have puts coming off. That's good. So just be aware of what could potentially happen today. Taking a look at tomorrow. Really ugly structure here, hard to infer anything, so we're not going to torture the data to tell us anything that we want to hear. We'll just let it kind of say, hey, we're back and forth, and very, very difficult to read. 3900, 3950, 4000, 4010. All of these could be parking zones into the overnight, but we do note that above 4010, it's going to be extremely difficult to make a push today. Especially into tomorrow with this overall structure. This is completely dominated by in-the-money puts. Very, very hard to make a master run north at the end of the month with this type of structure. So just be aware of that. We do note it is a strong expiry tomorrow. It is the end of month, and so we should see a lot of jockeying around. We also note we can't define a transition structure. I put some notes in the Discord on this morning, and because we can't define that upper transition strike, it's not between the short-term goalposts. It just means the bulls are extremely weak right now, and it's very, very difficult to show that they have any momentum. Looking at the balance of the week, this is our crystal ball view into looking ahead for what we've got. We've got a tremendous amount of overhead in the money puts that are dominating the conversation. Below us, we've got a couple strikes that are starting, that are showing the out of the money, in the money calls that are present. Out of the money puts are definitely present, and you can see the key strikes: 3900. 4025, and we do think it's going to be difficult to break this kind of chain right here, so we do think we'll hold above the 3900. Could see a pausing level sometime this week in the 3925 zone, and parking, of course, 3955. This could be a free ride right in this zone, so just be aware of that. The transition for the week is lower. 3950 up to 4005, so we really need to break above this in order to have any chance of the bulls having anything to claim victory on. To the low side, you can see that there's actually, if we lose 3900, we can start breaking down, and that will embolden the bears. We'll see more puts go in, and that will pull us lower. Finally, taking a look here at the combo complex, just a sea of red above us. No call speculators anywhere to be found except here at 4030. That's the only strike that is really dominating the call side. Everything else is in the money puts because it's above the yellow line, and call speculators just are not winning the game. We got to start flipping these deltas green in order for anybody on the bullish side to start winning. We think upside limits in the overall structure, 40-30, 40-35, not seeing a push aggressively into this with this structure. Just we think you're safe. If you're going to be a premium seller and you get a bounce, we think this 40-30, 40-35 is a easy range here. To the downside, you can see it's mixed, right? And so when we see something like this, it's anyone's game. This is much weaker than it was on Friday. So just be aware, the out-of-the-money put speculators are really out in force, and they're really starting to flip the bottom side of the SPX structure, which just goes to what all the indicators are that I just talked about. They're all showing more of a bullish push, or excuse me, bearish push, and so you want to be mindful of that as we go forward. Last slide here, 3,900 to the low side, very clean structure here. 4,200 to the upside, not so clean. You can see the JPM is sitting out here. This is what I was saying in that opening slide there, 39.95. We really got to get above that. The 4,000 line here is pretty dominant, so obviously if we can get above 4,005, that would be better. 40.30 here really starts helping us transition. The JPM strike is not liquid, but it is present. It has a delta influence as well as a gamma influence. It's not been neutralized. And we're down in this zone. So if we can push up into here, we'll start seeing calls stack onto this, long call stack on these short calls, and then we'll start neutralizing the impact of this, both on a delta and a gamma perspective, and that would be helpful to reclaim a push north. But right now, the data does not support, the structure does not support any aggressive moves to the north. We need to see things happen before that occurs. So with that, I'll leave you. If you have any questions, comments, concerns, come on in and join us. Go to this link here, upper right-hand corner, pricing tab. Fill out the blanks. Come on in. 14-day free trial. All the tools turned on. Great group of traders, mods, admins, all there to help you learn how to read this stuff and apply it to your trading. Follow us on Twitter at GammaEdges, and I would urge everyone to read the thread that we put out over the weekend on Charm. And then here on YouTube, two things. First of all, if you like today's content, let me know immediately by smashing that like button. It gives me immediate feedback that I'm providing the content that you guys want to see and that you think is actionable. And then second, subscribe, because when you subscribe, you get notified of when myself, Taylor, and Michael post videos. And the intent of all that is to help you see what we see and apply this to your overall trading. So with that, I bid you farewell. Make it a great week. Be safe, and we'll see you in the Discord. Thanks, everyone.